Howdy, folks, and welcome to the Daily Coin. My name is Rory, and I have a very special broadcast for you guys today. It's Friday, March the 20th, 2015, and the new London Gold Fix goes into place today. And as we will see, there are some major revelations going on that may or may not be known by everyone. And we're going to allow Craig to break it all down for us. And without any further ado, Mr. Craig Hemke.
The significance is likely in that there's no Chinese participation.
I find that very interesting.
I do too, and especially with the news items. There was even on CNBC within the last month. CNBC.com had a thing about this new yuan priced fix out of Shanghai that is coming.
Yep.
And I think the fact that they want nothing to do with this kind of just is somewhat eye opening. I mean, all we can do is kind of speculate. But it is interesting,
now,
no doubt about it.
What CNBC was referring to is that the same market, or the same market that you had talked to Andrew McGuire about?
No, that's a whole different deal. This would be an official Shanghai fix, if you will.
Okay.
That has been rumored. Andy's been talking to me about this for a couple of years that they were going to do this. So here, China plans to launch a yuan-denominated gold fix this year on Shanghai. So they're going to instead have their own wholesale fix and just bypass London entirely.
That is very interesting.
Then when you factor it into this other stuff that you and I have talked about, and I guess we'll talk about next week with Alistair and Dave.
Yep.
Kind of speeding along in that direction, isn't it?
I would say. I would say that there's been some, and I kind of want to paint a picture here, Craig, for you and for the audience, and I want you to kind of help me to understand if I'm seeing, if these dots are connecting properly, or if I'm kind of wandered out into the weeds somewhere. But
fair enough.
I want to start with the Gold Initiative, November 30th, Switzerland.
Okay.
And the president of the Swiss National Bank came out and he was campaigning against it, which he was not supposed to be doing.
Right.
But there's at least a couple of different sources that told me directly that was happening. Okay. So it was voted down. The next week, France announces that they have a direct currency swap with China, which I find those two very interesting in themselves. And then we have this billboard that shows up a couple of weeks ago in Bangkok saying, the RMB, the new choice, world currency, with it showing a gold coin, And then earlier this week, we find out that Germany, Italy, France, and the UK are all moving towards the Asian Infrastructure Investment Bank, which is China owned, and it's kind of the alternative to the World Bank, which is a criminal organization. Now we have today, on Friday, March the 20th, we have the launch of the new London Gold Fix, and China is not participating. So with all of that as background, and China is actually going to have their own yuan-based, renminbi-based gold fix, and I don't see where that's going to, if they've announced a date on that.
No, they haven't.
Okay.
They haven't.
And how are these things all connected? Are we moving in a particular direction here?
I don't think there's any doubt that they're all connected. No doubt about it. And I will be happy to back you up and add some additional color.
Please. I want to paint this picture so that we can kind of see the stream that's headed towards the Shanghai Cooperation Organization that you and I and Alistair McLeod and Dave Kranzler are going to discuss next week. We're going to really dig into that. So I want to kind of lay some ground, kind of lay the groundwork for where all of this stuff is all headed, and if there is any significance to China not participating in the new London Gold Fix, and how you see the new London gold fix impacting the markets in light of everything that I've just said.
Well, I think, Rory, uh, the fix, at least if anything, the changes appear to add an increase of transparency to the fixing process. But the fact that it's mainly just the same old participants, it's just the same old banks that are doing it, just because they're doing it in more of an open auction process rather than just in a closed room someplace. It doesn't really change things much. And I think the biggest significance of all of this is that since this was first announced, we've all been waiting for the inclusion of a Chinese bank or two in this process, so that those banks wouldn't have to deal with the bullion banks any longer when they try to access the wholesale markets in London. And here we are, the new process is up and running March the 20th, and there is not a single Chinese direct participant in sight. And I think that's telling. Yeah. We have been waiting, well, it's been rumored, let's put it that way, for the last couple of years that the Chinese were going to be announcing their own wholesale fixing process, so that there would be at least an Asian fix, an Asian wholesale price that would completely bypass London. And again, we've been waiting for that announcement. And now all of a sudden we saw, just at the end of February, some stories came out. There was specifically one posted even to CNBC that this was coming this year. That there is going to be a Chinese yuan denominated daily price fix set off of the prices found in Shanghai. And so when we then combine that with the absence of Chinese banks in this revamped London process, I think you can begin to see where this is headed. The London scheme is arcane. It's antiquated, whatever term you want to use. And it is going by the wayside. The dominance in precious metals pricing, the dominance in precious metals delivery is moving to the east. And I don't know if the powers of the West, if the banks really even care. Whether it's Bernanke or Greenspan or Mother Felon, they all treat gold as if it's just this barbarous relic. The U.S. has completely attached its fortunes to the paper dollar and the preservation of the dollar as a reserve currency. And I don't think the power brokers of the U.S. even really care about gold at this point or understand the significance of it. And I think they're about to get a lesson in understanding the significance of it in the months and years to come.
So what you're saying is that these people don't see the golden rule still applying?
Right. Exactly. I think when Greenspan or Bernanke talk about it as a barbarous relic, I think they really do see it that way.
Very quickly, if you could answer another question, because I'm curious about this. The price of gold today is $1,580. The dollar during these last 3 years was devalued almost 50%. When you wake up in the morning, do you care about the price of gold?
Well, I pay attention to the price of gold, but I think it reflects a lot of things. It reflects global uncertainties. I think the reason people hold gold is as a protection against what we call tail risk, really, really bad outcomes. And to the extent that the last few years have made people more worried about the potential of a major crisis, then they have gold as a protection.
Do you think gold is money?
No.
It's not money. Even if it has been money for 6,000 years, somebody reversed that and eliminated that economic law.
Well, it's an asset. It's the same. Would you say Treasury bills are money? I don't think they're money either, but they're a financial asset.
Why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Some people still think it's money. I yield back. My time is up.
They know that when the U.S. Finally disavowed itself of the gold standard 40 years ago and set itself off with a paper dollar standard, we basically went all in and said, look, this is the way it's going to be. You can have all our gold because that's fine, because the dollar is as good as gold and it's always going to be that way, as if that's the way it's always been. And the world is eventually has figured that out and is trending back toward some type of hard asset, whether it's a gold standard or whether it's gold-backed trading notes or whatever it is. We're headed that direction. and the U.S. is kind of out of the loop in this process. You mentioned the Swiss National Bank. The Swiss National Bank went all in a couple of years ago. And not only have they leased out all of the gold that they have, so they don't even have a clear title to their 1,000 metric tons anymore, at least in my opinion. With that election, supposed election or referendum last fall, as you said, even the head of the Swiss National Bank, Thomas Jordan, was out openly campaigning against this idea of bringing home some of the gold, again, because they don't have clear title, and backing, at least partially, the Swiss franc with gold and depegging it from the euro. Well, as we all know now, it's turned out they had to depeg it anyway, at least publicly, about a month or so ago. Yeah. And they are all in as well. I mean, they are all of these Western, if you will, European and American central banks have completely gone all in on the fiat currency structure. And we are all going to suffer as a result, because it may not happen tomorrow, it may not happen next week, but the future is going to be based off of the desired infrastructure of these creditor nations like Russia, China, India, and the rest, all making up loosely this Shanghai Cooperation Organization. And whatever currency system they ultimately use will be the one that will dominate the 21st century. It won't be the existing system.
So where would that leave us? Where would that leave the Western world? I mean, are we going to have to play by their rules, or are we going to live in two different monetary worlds?
Almost, in a sense, it's almost two different monetary worlds, because it's not that the U.S. will suddenly be using yuan in daily transactions. We'll still be using the dollar. And if the euro survives, the European Union will still be using the euro, but they'll be in tremendously devalued form, in that all of the trillions of dollars that the U.S. has printed over the last 40 years have been shoved out around the world. It hasn't really been our problem. It's been everybody else's problem. And that's why we've had this kind of false sense of prosperity, because we've printed all this money, but yet we've exported all of the inflation. But as demand for dollars then drops, as this alternative system is put out there for the rest of the world to use, all of those dollars that we printed over the last 40 years finally come sloshing home. And when there's all of this extra supply of something, well, you know what happens to the value of it? It goes down. And so we are going to be faced with some pretty nasty economic conditions here in the West. And not that I don't think we'll ultimately be subservient to this other system, but we're definitely not looking at the continuation of, let the good times roll, as we've seen for the last 40 or 50 years, where the U.S. is the world's superpower and economic engine and all that kind of stuff. The times are changing, no question about it, and it's not really a function of if; it's just a function of when all this takes place.
Dave Kranzler seems to think that there's going to be war, and I kind of tend to believe or agree with that.
Yeah,
that's been the MO for what, 200 years, 300 years.
Yeah, well, that's really all you have left to defend it. That's the worst possible option. I mean, we talk about this transition as hopefully being something orderly and peaceful. But in the past, it's not the way it's worked, because whoever has the power of being that global currency, that reserve currency, whoever has that power has invariably used that power to build up their military. And so when it's all starting to slip through their fingers, the only button they have to push is we're going to force you to keep the status quo going. I think a lot of that is behind all of the global events that we're currently seeing, whether it's the Asian Spring or the war in Iraq earlier this century, or all the way up to Ukraine today. Right. Yeah, I worry about that too. I worry that this transition won't be done peacefully. It would almost be surprising if it was done peacefully, Rory.
It really would be. That would be outside of the norm. And with the new gold fix going in, with the Shanghai Gold Exchange having a announced future fix, how is that going to even work? I mean, as far as how are we going to? How's the world? How's the gold or precious metals world going to operate with two different daily fixes going on? Because the understanding I have is that the premiums are a little bit higher in the Asian market than in the Western market.
Yes, and eventually, I guess people will look at that as an arbitrage opportunity if there are different wholesale prices around the planet. That's some of the rationale behind that new exchange that Bullion Capital is building out that I've been talking about on my site the last couple of weeks, is a way to interconnect all of these different wholesale prices while cutting out the manipulative power of the bullion banks. And where ultimately it has a transformative effect on the gold market is that the power that the bullion banks have is not just in the wholesale delivery and distribution of metal in London. The bullion banks are the ones that make the markets in the paper metal as well. And it is that futures price that so dominates the actual physical price setting process, at least for now. Ned Naylor Leyland always called it the futures tail that wags the spot dog, that the spot market is obviously where the action is, a much larger market, but the paper futures markets in London and in New York are what really set the physical price. And as this power transitions away from the banks, as they're made obsolete in the time ahead, then that's going to eliminate the ability of these banks to manage the futures markets as well. And if price eventually is set and discovered through actual physical delivery, through actual, a physical buyer and a physical seller, that's going to drive price a little bit higher.
I would think.
In the end, yeah. And so that's where ultimately I don't know, I guess the excitement for a metals investor lies, because we all recognize that, let's put it this way, where the system is really stressed and breaking anyway, is the paper price, these machines, the speculator trading machines, the high frequency traders are pitted up against these bullion bank trading desks. And they move price all around on a daily basis, and there's no connection to fundamentals at all. And often it's driven by these banks to a price that profits them the most, based on whether they have to deliver physical at a certain price or whether they just simply know they can harvest some shorts or scare out some longs or whatever they want to do. The only way that the paper price has any legitimacy is if there is a physical delivery globally at these fixed prices that can be made. And if there is no physical delivery made at the paper price, the whole system begins to unravel and break apart, because again, the paper price can't have any legitimacy if there's no physical transactions being made there. So far, during this price decline over the last couple of years, physical transactions have continued at the paper prices. And so, it is what it is. But what we're beginning now to see is what appears to be an exhaustion of the West's physical supply. I mean, it's been leased and released, and very little clear title metal is left. We hear the stories about the empty vaults in London, the big drawdown in the GLD, and you begin to wonder how much longer the West can supply metal to deliver at these depressed prices. And so that's what we're all kind of anxious to see, is how much longer this can continue. You got all these people that read the charts and think that gold's going to 800 or to 600 or 250 without factoring in this physical supply issue at those prices. Already we're seeing a couple thousand tons a year being delivered through the Shanghai exchange. We really don't even know where that's coming from.
Right.
And so the entire system is stressed and being pulled, the current system at least, in being pulled and frayed from every single direction. There is a new system coming, whether it's based in Shanghai and has something to do with this new yuan denominated fix, we'll see. But I guess the moral of the story is the current system is going away, and today's development with the new fix in London is just part of the process.
Just just another step in the direction that we as physical holders want it to move in.
Exactly, and that's the big takeaway. What people can't get confused by is this last couple of years of the price being jammed lower, and think that it's somehow related to some fundamental physical reality. That people all around the world are selling gold. If you'll see gold down $15 in a day. And the talking heads on CNBC or Bloomberg will say, "Oh yes, well, investors shun the yellow metal today," as if people that are with an ounce of gold on their desk said, "Oh, to hell with it," and they take it down and sell it someplace.
Yeah, no, that didn't happen.
Exactly. It's just a handful of hedge funds being driven in and out of positions by these bank trading desks, trading paper metal. And again, like I said, there are some wholesale transactions that are taking place at that kind of falsely derived paper price. But nonetheless, this idea on a daily basis that it's changing due to fundamentals is just ridiculous. The main thing for people to realize is that this new system is coming. Yesterday is not going to be, or tomorrow is not going to be like yesterday. And the value of the precious metal that you own is going to be increasing.
Well, I wanted to say that one of my favorite questions for about 2 years now has been, where's the gold coming from? And I think that we're getting ready to find, I think that question is getting ready to be answered. I would say within the next 18 to 24 months that we're going to have a very clear-cut answer to that question as to where the gold is coming from, because for the life of me, I have not. Every time that I've asked someone that question, the answer that I've received is, well, it's coming from the central banks. Well, to a degree, I can understand that and I can buy into that, but it gets to the point to where I'm looking at an average of 50 tons a week moving through the Shanghai Gold Exchange, and it's like, hello.
Yeah.
London is not giving up 50 tons a week to send through the Shanghai Gold Exchange.
And if you look at those totals that come out every month, Steve Sanangelo does a great job of posting these every month, showing the export numbers out of New York and in London, and then going through Switzerland and then exporting through Switzerland into China. Then it doesn't all add up. No. And that's what leaves you scratching your head. And I do think, though, that there's a lot of central bank gold and even privately held gold that has been leased through these bullion banks. And these bullion banks take that gold, they structure a lease, and they say, oh, hey, we'll pay you 1%. Your gold's just sitting there collecting dust, but we'll pay you interest if you lease it to us. And then they go and they dump it, and they move it physically in the market in the hopes that they'll be able to, when that lease comes due, get the gold back and then repay it back to whoever loaned it to them in the first place. And they try to match all those up. And that's where the hole that they're digging just keeps getting deeper and deeper and deeper. There was news last week that now after, about a year and a half, 2 years after Venezuela repatriated their, whatever it was, 80 or 90 tons of gold, that now Goldman Sachs and Credit Suisse are down there trying to talk them into leasing it back out.
Yes. And they're saying, no, thanks.
Boy, they'd be crazy if they did, but yes. But that's all part of the process. Hey, give us that, and then we'll promise we'll give it back to you a year or two from now. No problem at all. I mean, we can manage this. And then they take that 36 tons and they deliver it out. The first rule of when you're in a hole is to stop digging, right?
Yes.
And that's not what they're doing. They're digging away frantically, trying to maintain the status quo. And that's where, like I said, I firmly believe there are multiple 30, maybe 50 beneficial owners for each ounce that's out there of gold, and 30 or 50 folks that think they own that ounce. And they're all going to show up when the music stops thinking that they're going to take delivery or lay claim to that ounce. And that's when the madness really starts. Wow. When will that be? Well, probably not tomorrow. But, as any confidence scheme eventually unravels, and this one will unravel too. It's just a matter of time.
I'm going to give it about 24 months And on that, I know you've got a very important interview coming up, and I'm not going to take up any more of your time, Craig. And I certainly appreciate all the time that you've given us today. And we've been speaking with Craig Hemke over at TFMetalsReport.com. And say hello to everybody there, Mr. Craig.
Again, thank you, Roy. It's been a pleasure, and I invite everybody to stop by the site. It's an important time to stay on top of this stuff, and we do a pretty good job there of keeping everybody up to date.
You do a great job, and certainly appreciate it. And I'll talk with you next week.